Right, hello everyone, welcome to this video. It's Monday the 5th of Jan. This is going to be the outlook going into tomorrow. So, as we outlined yesterday in the weekly outlook stream, I wanted to see this high get taken out. And as we can all see, today we had a nice push up into this high inside the daily fair value gap, and we've had a very good reaction. And another thing I also like is we have closed back inside these two candle highs as well. So for me tomorrow, I want to see DXY go lower. And ideally tomorrow we get a closure below this daily inverse fair value gap and also this new day opening gap. They would be the two key levels I want to see us close below tomorrow. So that is essentially what I'm looking for. We had a very nice push up higher going into, obviously we basically gapped up higher, and then we had a double sweep here because we, as you can all see, we took out this high during Asia at 3 a.m. and then New York session we took out the high again. So for me, I want to see us break down lower from here. And then we had the London close news, which gave us the big move lower. And the reason I didn't look for anything today was simply because by the time I got on the charts, if I just get rid of these, if we go to the ADR, by 4 a.m. we've already hit 100% ADR. So to me personally, that is low probability, and you should all know that by looking through the low probability filter. So going into tomorrow, what am I looking for? And well, obviously I'm looking for bearish DXY, but what areas am I looking for DXY to sell off from? On the 4 hour, we currently have this new day opening gap, new week opening gap, as you can clearly see, inside a 4 hour fair value gap. So I'm looking for either both of these areas to get hit, or at least the 4 hour fair value gap. So the ideal plan would be maybe potentially during Asia, we can chop around, we create some highs, London pushes up higher, potentially into this 1 hour fair value gap, or we tap this one here, and then we end up breaking down lower. And we will be looking for these lows all the way down here and eventually work our way down into 97,749. So that is essentially the plan going into tomorrow. So clear this up. If we take a look at Euro, on the daily, we've had a very, very nice daily candle closure. We obviously took out the low from the 19th of December, traded into this daily fair value gap, and same sort of thing as EU, we've had a very nice candle closure because we've closed back inside Friday's low. So me now, I'm looking for higher Euro. I will be looking for higher Euro from this price, but what will 100% confirm that Euro will go higher for me personally is if we get back above this daily inverse fair value gap, as there is still a possibility we could trade up into this daily inverse fair value gap, because we haven't done so yet, because Friday traded lower and obviously today traded lower. There is a possibility we could trade up into here and then continue lower. That is also something we have to be aware of. So even though we have our bias on DXY of lower, we do have to be cautious that this could be a roadblock for EU to continue lower. So what am I looking for on the 4 hour? On the 4 hour, I am looking for us to trade into this 4 hour fair value gap. Ideally, we don't go below this 4 hour inverse fair value gap either. So that is the two areas I'm looking for price to trade into. It will look something like, if we get a chop around here, we have a weak low on the 1 hour, either London or New York, we trade into it, then we trade up higher, create like an order block here, trade into it, and then we can aim for this high. And then if we get our daily closure above this daily inverse fair value gap, we can then start looking for this high up here. That would be my game plan. But like I just mentioned, I am still aware of the fact that we do have this daily inverse fair value gap, which we can trade lower from. So only because we've had this daily candle closure doesn't mean, oh, it's going to be so easy to buy now. Because as you should all know, the markets don't necessarily work like that. GU. Obviously, if we're bearish on DXY, we want to see GU bullish. We can see today that GU has been way more bullish than EU. We now do have SMT at these lows here. Obviously, the 21st of December, we haven't taken out on GU, but the 31st, and then also if you look at the 19th of December, which is here, we also have SMT as well on GU. So GU today was the stronger pair, but I'll go over tomorrow why I am looking for EU buys. But we do have a nice inverse fair value gap that we have closed above, which we can now use as a key level to trade up higher into this daily inverse fair value gap, which is what I would be looking for. On the 4 hour, similar sort of thing, we do have this 4 hour fair value gap and also the daily inverse fair value gap. In an ideal world, we don't retrace too much. But maybe this 1 hour fair value gap at a push, but I wouldn't want to see us return all the way back down into here. And if we come into this fair value gap, I would like us to maybe just tap it into this breaker block here and then go up higher. I don't want to see a massive retracement way lower. Same thing on DXY. I want to see we ideally stay below this 4 hour new week opening gap and then go lower, because then that will be quite a valid move. And why would I want that to be the case? Because if you guys have obviously watched all the other material, when we have a stop run, the move afterwards should be quite big and explosive. So because of what we've done today and how the daily closed, I wouldn't want to see a big retracement, because then that will essentially slow down the movement of the move lower from this stop run. So just a small retracement, because retracements are healthy, and then we can go lower again. USD JPY, to be honest, now we have the bearish confirmation on DXY. I'm not interested in this. If we close back below this daily bearish, inverse fair value gap, then we could have used it again for a level to go lower. But as you can see, we have wicked up higher and sort of just chopping around. So me personally, I'm not too interested in that. USD CAD, yes, we have ran the high here from the 19th of December into the weekly fair value gap. But I don't see how we've had a bullish candle on USD CAD. DXY, we've had a bearish candle. So for me personally, that would suggest that them two are not really in sync currently. So I will be avoiding UJ and USD CAD for those two reasons. USD CHF actually looks quite good for lower prices. We did have the move I mentioned about close above the 1 hour inverse fair value gap, retest it. Unfortunately, retested it during Asia, and a move up into the daily rejection block, as you can all see. We have tested this daily fair value gap again and had a massive rejection lower. So now what I would be anticipating on USD CHF is we could potentially come up into this 4 hour fair value gap. And then we can look to trade lower from there. That would be my plan on USD CHF. But like I'd mentioned on EU, we do have this daily inverse fair value gap that we do have to contend with, because if you look at it from a bullish standpoint, we've had a stop run, trade up higher. Yes, we've taken out these highs, some of these highs here, and tapped into a daily fair value gap, but this could just be a retracement back into this daily inverse fair value gap. So we do have to be cautious of that. But ideally, I want to see lower prices on USD CHF, higher prices on EU, higher prices on GU, and I'm gonna go over now why I would prefer to long EU over GU. And some of you may be wondering why. Well, look what we have just done. If I do this, we have just taken out a higher time frame objective on euro pound, and as you should all know by now, once we take out higher time frame objective, there is a chance that we do retrace. And especially with the candle closure, you see how we have wicked it and closed back inside it. So me personally, I would expect some sort of retracement, maybe into this area here, and then we can continue going lower. Don't get me wrong, we can just still absolutely melt from here into this low, which would make pound the stronger pair to buy. But I would like to see a small retracement, which would then essentially make euro the stronger pair, and then euro would be allowed to catch up with pound, because as you can see on pound now, we are above the 24th of December high, but the 24th of December high on EU, we are nowhere near it. So that is essentially what I am looking for going into tomorrow. Obviously, I did say bonds have been in a consolidation, but I like how we have closed bullish on all three bonds. So that is essentially confirming that this move here isn't a manipulation move. Obviously, it can still be a manipulation move because this could just be retracing, but I like how we are fully in sync at the moment. Obviously, we could wake up tomorrow morning and we are back above this high. There is a possibility that can happen. But what I will be looking for is a London reversal or New York continuation or New York reversal. They're the three that we're going to be focusing heavily on this year. And that should hopefully increase our win rate, which will increase our profitability and how much we make. Gold. So we have had an absolute huge, 1,167 pip move today on gold. We're still respecting this daily fair value gap, and we have been very bullish. We've had 1, 2, 3, 4, 5, 6, 7 4-hour bullish candles in a row. So we are a bit overextended. So if I was going to buy, I would look for maybe a retracement into this 4-hour fair value gap, which we could then use to go higher, because we do have this 1 hour week low here. But personally, for now, I won't be touching this. Nothing really looks like super clean for me. But yeah, the main focus tomorrow is EU and USD CHF. They are the two that I am watching going into tomorrow. So yeah, if anyone has any questions, please do let me know. And until then, have a good rest of the evening, trade safe, and I will speak to you guys tomorrow morning. Thank you.